Are you planning ahead for your future? Really? Have you been investing then? Today, I'll persuade you to start investing. I have been investing for over 2 years now, and as a finance major, I like to make it my duty to encourage my peers to start investing. The four main things I want to cover are why investing is better than saving, why investing is so important, different things you can invest in, and inflation. And everyone wants money, right? The American dream is to be wealthy and retire young. But the thing is, you cannot save your way to wealth. You have to invest your money. According to nerdwallet.com, the average return rate on investments is 10%. However, in comparison, according to bankrate.com, they claim the average interest rate is only 0.06%. So while you save up that money on a weekly basis, assuming you don't touch it, by the end of that year, you're only going to get a profit of 0.06%. However, if you invest it, you have the potential to grow it by 10% or even more. Granted, there is that risk of losing money or not getting that 10%. However, I feel the risk is well worth the reward because 0.06% is not a lot of money at all. Now that you're aware of how crucial investing is to building your wealth, you need to know why investing is so important. Owning a stock is earning partial ownership of that company, and a lot of companies reward that with dividends. And investments have the potential to appreciate greater than savings. Now, knowing how important investing is, it's also important to know what to invest in. There are many different things you can invest in, whether it's stocks, bonds, cryptos, and more. And according to ICICI Direct, mutual funds take your money and break it up into many different stocks and bonds or whatever. They have a moderate return, but they have a much lower risk because that money that you put is spread out across multiple different stocks, bonds, whatever it might be. And according to dividendearner.com, investing can lower taxes because of accounts like the RRSP and the TFSA, where taxes on investments is lower or non-existent. And let's be real, I don't think any of us like taxes. Now that I've covered stocks and bonds, I want to cover cryptos. And I believe cryptocurrency is the future. According to Investopedia.com, cryptocurrency is a virtual money that takes the form of tokens. And I'm sure many of you have heard of Bitcoin, and a lot of the whole NFTs are becoming a huge deal, and they involve payments in Ethereum. But there are plenty other cryptocurrencies out there. According to HowManyBitcoinATMs.com, there are currently 48,004 Bitcoin ATMs in just the United States. And basically, Bitcoin ATMs are just like any other ATM, but you deposit your cash in, and then for a fee, they will send you Bitcoin directly to your wallet. You can also sell that Bitcoin for cash if you want to. And there are also crypto wallets, and you can purchase things using cryptos. And there's even crypto exchanges. So, like I said, with the ATM, you send it to your wallet, which you can just get on your phone. There are multiple apps you can use. And a lot of them offer purchasing. So some stores and like dealerships, like Tesla, for example, they allow you to purchase things using Bitcoin or other cryptocurrencies, although Bitcoin is certainly the most popular option. And with crypto exchanges, if, say, you do something for a friend and you want to get paid, you can just ask them to pay you in Bitcoin. Or, for example, you need to pay your friend or they lend you some cash, you don't have cash on you or whatever, you can just send them some Bitcoin, and in milliseconds, it'll get sent over to their wallet for them to have. Now that you know what you can invest in, it's important to know if it's truly worth it. Now anyone can dream of being rich, but only those who invest their money can become rich. You gotta make your money work for you. That's a common saying. And so, like I said, with investing, the average return rate is 10%. And there are also, like I said earlier, dividend stocks. So there are certain stocks that you can invest in. There are all types of different companies. Apple's one, AT&T's another. Glad's one I like to use, and basically by owning shares of that company, there's what's called a dividend yield, and the company will pay you a certain percentage on the share price, and then basically, so there's all types of different ones. There's monthly stocks, bi-monthly, quarterly, whatever. They will pay you a percentage of money, and it's basically just free money that you get. So purely by owning those shares, the company is paying you back money as a thank you for investing in their company. One important thing to realize is the value of your dollar is not consistent, and inflation is a huge cause of that. According to data.bls.gov, the average inflation rate of the past 9 years is 2.1%. According to Cointelegraph.com, Bitcoin's CAGR is 196.7%. And the CAGR is found by using the return on investment between two time periods and computing average compound return for each year. So CAGR stands for compound annual growth rate, and basically what that means is Bitcoin has a compound annual growth rate of 196.7% of all time. So roughly from the beginning of Bitcoin till now, it has increased in value 196.7% yearly. That is insane, especially considering to those massive 2.1 and higher inflation rates. Now that you know the average inflation rate and how your money growth compares, it should help you make a decision. To conclude, we looked at investing versus savings, the importance of investing, stocks, bonds, and cryptos, making your money work for you, and inflation rates. So now that you're aware of the basics of investing, I'll leave the ball in your court on whether or not you decide to start investing. I thank you for taking your time to listen to my speech, and I wish you the best of luck in your investing.